Hello friends, this is Jimmy Singh, broker owner of Supermax Realty, 647-961-2639. So friends, in today's video, I would like to take a minute to discuss another question which some of my clients ask. What is the best way to invest for their kids' education or future? See, the sooner you start, the better it is. I have personally invested for my kids when they were born. I put a deposit or down payment towards their houses, and then in a couple of years they're going to be ready in pre-construction, and then in next 20 years time, 15 years time, my goal is to pay them off. So once they're ready to go to university, whatever they want to be, I have properties ready for them to sell and start their life without any debt. So number one thing you have to do is take equity from your house if you have substantial equity in your primary residence, or you already have a paid off investment property anywhere in Golden Horseshoe, Toronto, London. So what you do is you take that property, and when you invest for your kids, the time horizon is 15 to 20 years. So you are not technically looking for cash flow to sustain your lifestyle. You're just looking for good appreciation. And in last 2-3 years, I'm seeing some markets exploded, even growth of 20% or more. Try finding that kind of returns on consistent basis with any mutual fund or stock, right? And what you do is you look for appreciation that pays itself off down by the time your child is 18-20 years old. And let's say they want to be a doctor. Some of these schools is close to north of like $500,000 or $1 million to be a specialist in their field. And if they go to US, as a Canadian, the prices are skyrocketing, right? And you don't want to be jeopardizing your retirement at that time by not planning these things. And this will give your kids head start. So it's not that they're coming out of medical school or from a law school and carrying a debt of $500,000, taking into their marriage, causing extra stress. So whether it's paying for your education, helping kids buy their first primary home or wedding, or for whatever need, give them a head start, because the way things are with inflation, every rising year is getting harder and harder for millennials and first time buyers to buy any kind of house. And I wonder, what would the situation be in 20 years time? People can't even afford to live in big cities, right? So personally, I like all the different financial tools which we have in Canada, whether it's your savings in RESP, where government gives a little bit money, and then you invest in mutual fund stocks and TFS and whatnot. Obviously there are another tools, but I like the leverage where you put 20% down, bank give you 80, and then you are holding a growing appreciating asset which is like $500,000 or something, and you're getting appreciation on those dollars, right? But as I said, make sure when you buy any kind of investment, you sit together and see your risk tolerance. Because as I said, money sitting in the bank, or you just saving at a 2%, 3% interest at the bank with inflation hovering around 2%, you can't get that kind of return and income which is available from real estate, because properties have been consistently going up for last 20-30 years. Obviously there is like up and down, but if you have a long horizon and the mortgage will be paid off by the tenants, imagine in 15, 20, 30 years it is paid off property. You can give it to kids if they want it, help them out grow up in their life, or give them lump sum money so they can start up their business and settle down. So if you have any questions regarding starting investing for your kids and build their portfolio, give Supermax team a call. My number directly is 647-961-2639, or you can visit my website www.supermaxrealty.ca for a confidential meeting. Again, thanks for watching. Have an awesome day.